I'm Georgette Miller. Welcome to our show. Now, I'm a practicing attorney. I've been practicing for about 12 years. And in the first 8 years of my career, I basically represented Fortune 500 companies, large developers, large real estate brokers, large investment banks. And I spent those years basically learning and understand how money worked in a real practical way. In 2008, I started my practice, and the aim was to basically help people that didn't have access to the resources that I had and made an impact in their lives in a real way. I basically took what it is I learned as a child, took what it is I learned as an attorney working for large institutions, and decided, look, how can I get it to people that didn't have access, didn't have the money to have the resource of someone like myself. So now let's get into it. Today we're going to talk about your FICO score. What is that? I mean, it seemed to have crept into our lives, our very existence. We seem to need it for what we think is a job. We seem to need it for any loan. And there are many of us that sees our FICO score almost as some kind of mark, some kind of grade score as to who we are as a person. We're going to peel back the onion and try to figure out exactly what this thing is. How important is it really in our lives? Have we abdicated our power to it? And if we have, how do we take it back? We're going to take it to the very basics here, starting with what does FICO mean? FICO, or yes, FICO stands for Fair Isaac's Company. Now, this was a company that, again, 20, 30 years ago, came up with a matrix that was going to be the gold standard as to who we are and how we go about accessing credit. But again, have we abdicated our power to our FICO score? And if we have, how do we get it back? We'll be right back. I believe your financial life is like a stool. It's like a three-legged stool. The first leg is if you're in debt, you need to get out and stay out, right? That's stool one. If I'm in debt, I need to work it out. If I have a car note, I need to have my come to Jesus moment where I decide whether or not I need this car or not. And if spending the $500, $600, $700 a month on this car is worth it. If I have credit cards, why do you have credit cards? But we'll get to that. But if you have any kind of debt, you need to sit down and look at your life and say, okay, if I'm in debt, I need to get out, and I need to get out by any means necessary. The second leg of my stool is cash is still king. Credit, and I know you all believe in your FICO score, but credit is the ability to walk into a store and buy something you can't quite afford. So they lend you the money, you pay them back at interest. Let's walk into the store and buy what it is we can afford, right? First leg, if you're in debt, get out. Second leg, if you can't buy it cash, it ain't for you, leave it alone. The third leg is savings. People come into my office, prospective clients, and they indicate that, Ms. Miller, I want to save, but I can't. Your life is a business. You are the CEO of your life. And if you're running a business, you have to have a budget. There has to be a budget for advertising. There has to be a budget to pay your employees. You have a budget. And you have to stick to that budget in order for your business to succeed. Your life is the same way. You must have a budget. If you've set up your life so that you cannot save somewhere in the neighborhood of 10 to 20%, then you're running your life into the ground. You're running your business into the ground, and the business is you. So if you are not saving 10 and 20%, you need to get pen to paper. And you need to write down, okay, where is my money going? And be honest with yourselves. Is it going to the coffee and the $1.50 coffee in the morning? Is it going to your child coming to you and saying, I want the latest Xbox, or I want the latest everything, and we feel that the child must have it? Is it going to you feeling like you work hard all day, every day? You got to treat yourself. I'm not saying we don't work hard and we shouldn't reap the rewards of that. But we need to look at what is the reward. Is the reward buying a car that depreciates over a 5-year period and you overpaying? Or is the reward opening up an IRA account and putting money in that IRA account, and every morning you go online and you open up all your investments, you open up your 529, you open up your brokerage accounts, and you see all the money you're putting away for your retirement? What is the reward that's meaningful to you? Is it, again, in a car that depreciates, or in an account that's paying you interest and appreciate? That's the new money mindset. That's why I'm having this show. I see people walk into my office and they have everything they believe to be the trappings of success, but they're not successful. Welcome back. Now, we're going to really get into the nuts and bolts of what is your FICO score. Again, FICO stands for the Fair Isaacs Company, and there's 3 major credit bureaus. There is TransUnion, there is Experian, and there is Equifax. Now, these 3 companies harvest information regarding you, how long you've had credit, how much credit you've had outstanding, whether you pay your credits or your outstanding obligations on time. And Fair Isaacs came up with this matrix that says, okay, if you have this amount of debt, this amount of income, this type of credit history, we're going to assign a number to you. Now, the range, I believe, goes from 450 to 850. And where you fall on that pendulum determines by your score your access to credit. How do you find your credit score? Well, the federal government enacted statutes, laws, whatever, entitling every individual to once every year getting a report from each bureau. And the website you want to know or go to access your credit reports for free is annualcreditreport.com. Again, every individual has the right once a year to access their credit reports from annualcreditreport.com. And once a year you should do it. 2 of the major components that make up, or it gets thrown into the matrix and your number comes out, are income and debt. The amount of debt you have in relation to the amount of income you have, something called your DTI, your debt to income ratio. If you have a lot of debt, but you have income, your DTI is really depressed. Therefore, your credit score is really depressed, because even though you have income, you have a lot of debt. So lenders look at you and say, okay, you have all these outstanding obligations. So lending you money in addition to the outstanding obligations that you have, you will be at a higher risk of not being able to pay these new additional obligations. So when you're thinking about your credit score, the 2 things I want you to focus in on is how much income you have, or even the possibility of income. Because you know the stories of 18-year-old students going to college and then being handed credit cards and lines of credit like it's candy. So it's the income or the possibility of income and debt. I want to tell you, as I sit here, I would be remiss not to tell you that when you file something like a Chapter 7 or a Chapter 13 bankruptcy, what you're doing is you're getting rid of the debt. Stay with me. So you still have your income and your possibility of income, but you've discharged and gotten rid of the debt. This is why many people find that after filing something like a Chapter 7 bankruptcy, their credit score goes up. Why does it go up? Because you're staying with me. They still have the income and the possibility of income, but the debt is gone. And that's why people who file Chapter 7s find that they get credit card applications in the mail within 6 months, and they qualify for a mortgage within 2 years. So here we're peeling back the onion. What is your credit score? How does it work? Stay with me. 2 things you want to focus in on is how much income you have and how much debt you have, and the ratio of the debt to the income. We'll be right back. Welcome back. This is the portion of the show where we take questions from you, our audience, and we're taking a question from our Facebook page. And the question we have here is from May. May's question is, how long would it take to recover from a FICO score that has hit as low as 450? Now, May, as I talked about earlier, the issue is how much debt you have, how much income do you have, and your FICO score will recover over time. So we need, if the situation is you have a lot of debt, you need to get rid of that debt as soon as possible. You've heard me talk about it in other shows. One of the easiest and basically fastest way to eliminate debt is to file some kind of bankruptcy, 7 or 13. When you do that, you'll have your fresh start, and then over time, you will gradually start over again. What does that mean? There are many secured credit cards out there that you can get. You get a secured credit card that has $200. You use it and pay it. And over time, you're rebuilding your credit. Remember, you're starting from scratch. Over time, you will find that your credit score eventually starts rising. Not even eventually, probably right away, starts rising again, because now debt is gone. And what's being reported on your credit report is you paying your secured credit card on time every month for 6 months, for a year, for 18 months. So once you get the debt eliminated, and if in the past you've had late payments and all that good stuff, the further away you get from the debt and the late payments and start a process where you're making current payments, you'll find that your credit score will go right back up. Now, we're going to go into the next section where I demystify the foolishness, where I really ask you guys, why do you need credit to begin with? So stay with us. We're going to go to the next question.
Questions you want answered? Connect with Georgette on Facebook.
Next, we have Jean on the line, and we're going to hear Jean's questions.
Hi, Georgette. What major life purposes do I require a good FICO score?
If you want a good if you need a good FICO score, that means you're looking to borrow. So if you walk into the store and buy anything cash, then you don't need your FICO score, right? I want you guys to stick with me and stick with that. However, going into Jean's question, I guess the major purchase that will require a good FICO score, so to speak, is a house. And it's my understanding that you need to have a FICO score, the last time I looked at the data, of 620 or higher in order to qualify for an FHA mortgage, which is what you want, a mortgage insured by the federal government, to buy a home. However, you know, there's such loans as no-doc loans. If you buy a home and save up enough money to pay down somewhere in the neighborhood of 40% to 50% of the purchase price, nobody really cares what your credit score is because you're going to get the loan nonetheless. So, short answer is you probably need a credit score of 620 or better to buy a home, but I'm an advocate of cash. If you don't need to borrow for it, you really shouldn't be buying it. And if you can in some way, some possible way, with the price of homes today, save up enough to have a large enough deposit, you really don't even need to worry what your credit score is. We'll be right back. Well, bankruptcy is seen as a bad term by those that don't know it. Those that know it use it. And you see it in the news all the time. Companies use it because all bankruptcy is debt forgiveness, and it's a business tool. That is all that it is. It's not a moral stain. It's not a moral abhorrence. It's a business tool. Put yourself in the federal government shoes for a nanosecond, or any government agency. You have racked up an astronomical amount of debt. Your wife got sick. You had all these medical bills. A spouse wasn't working. You used your credit cards as deficit spending, trying to keep up with your life. And here you're at a crisis point, crossroads. You have all this debt. You have to feed yourself. You have to feed your spouse. You still have to feed your family. The federal government looks at it like this. Do I let this person go into debtor's jail as in the time of Oliver Twist? Do I let them lose their home, lose their cars, lose everything because of this debt that's hanging over them? Or do I get rid of the debt so that they get a fresh start to move on with their lives? The federal government is not giving you this help. It's a right, by the way. They're not giving you this help because they like you. They're giving you this help because it makes sense. Because if they don't take this debt off you, and you have this albatross, which will eventually let you lose your house, lose your job, lose your sanity. If they don't take this debt off of you, you're going to become their problem. Let's talk about companies. GM has been in the news recently. They're now the #1 automaker in the world. Bankruptcy gave them the ability to save the company, just like it would give an individual the ability to save their lives. What the GM bankruptcy did was it alleviated GM of certain contracts. They were able to get rid of certain contracts that felt erroneous, they felt were pushing the company under the ground. It allowed them to get rid of billions in unsecured debt. It gave them the ability to get rid of all the stuff that was keeping the company down, so that when they came out of bankruptcy, they had the opportunity to again be the #1 automaker in the world. Bankruptcy is not just for businesses. You have the same right. You have the same right to walk into bankruptcy court and say, Your Honor, I need help so that my life can go on, so that I can be the best person that I can be, so that I can provide for my family. You have the same right. Creditors have made unsecured creditors particularly, have sold you this bill of goods that bankruptcy is this really, really, really bad thing. And the reason they sell you that bill of goods is because they have a vested interest to do that. When you file bankruptcy, they don't get paid. So they're going to spend millions, in some cases billions, to ensure that you would be afraid of your own right. There's a saying in the country that I'm from where they say, in the abundance of water, only the fool is thirsty. So we have an abundance of rights. Let's not be foolish and not avail ourselves of those rights. Guys, we have this great new tool for you. It's a debt calculator. And what it does is it gives you the opportunity to see how much money is leaving your wallet for your wants, your necessaries, and in some case, foolishness. Go to Wild Media TV and click on the Georgette button and go ahead and play with it. Have your come to realization moment. And I'll see you on the Georgette show. Now we're at my favorite part of the show. It's the segment that I like to call Let's Demystify the Foolishness. And the foolishness here is the fact that we've been fed. You need to have a good FICO score. You need to keep your FICO score up. Somehow you're a bad person if your FICO score is below the acceptable norm. Somehow you've gotten an F as a you've gotten an F grade as a person individually. Guys, you've got to take your power back. We've given over our power to Fair Isaac's company and all the credit bureaus. Let's pause for a moment and think about it. We're being fed this nonsense that we must have a good FICO score. Why? So that you could borrow, correct? Why are you borrowing? Why do you care what your FICO score is if you have cold, hard cash in the bank? Why do you need to borrow for a car when you can save up your $5,000, your $2,500, your whatever $100 and go buy you a nice hoopty cash? We really need to start questioning the norms that we were told were norms. We need to start questioning, okay, what if I live my life and when I go to annualcreditreport.com, there is nothing there? That's ultimately my goal in life. For me to go to annualcreditreport.com, pull my credit reports, and there is nothing there. I don't care. I am not my home. I am not my car. I am not my house. And I am definitely not my credit score. Guys, come on. Question the norms and question why advertising companies for these big credit card companies are telling you you must have a good credit score. It's so that you can borrow. And I'm advocating for you and for me that if we don't have it, we don't have the cash to pay for it, we're not going to buy it. So we don't care what our credit score is because we're never going to borrow. We'll be right back. Guys, today we talked about your credit score. We tried to peel back the onion, and I'm trying to really plant seeds in you to, again, question the norms. Question why is it that you guys we've been told that we need to have a really good credit score and what a credit score is. I've also armed you with the two things you really want to be focused in on if you want to manipulate this credit score. Eliminate debt by any means necessary, and we've given you options of doing that. And your potential for income or the actual income you have. Once you take a look at your debt to income ratio and you make sure you've eliminated debt, your credit score tends to be on the upward trajectory, or over a short period of time will be pretty high. When you get that high credit score, what is the real purpose of getting that high credit score? Ultimately is to borrow. So I've shown you how to get a high credit score, but at the end of the day, I've told you, listen, don't borrow. If you can't walk into the store and buy it cash, it ain't for you. And them telling you that you need to have a credit score feeds into the system that feeds them. It doesn't feed you. Because ultimately, you pay them interest out of your pocket. Money's always best spent in our pockets than anywhere else's. And with that, as they say in my country, walk good And I'll see you guys next week.